We have Rupesh Sankhe who's joining us from Elara Capital on the phone line. He's on a tour right now, but he managed to chat with us on the phone. Rupesh, power sector stocks are in focus again. So there are two, camps to it now because the stocks have run up. One camp says that valuations are not very attractive anymore, even though the investment argument remains strong. The second part says that even though the returns in this space are capped, but the volumes can go up because of high demand and new capacity adding up. Which side of the argument in power stocks are you weighing on when you talk to your clients right now?
Yeah, good afternoon. If you look at the fundamentals are very strong. If you compare with the 2-3 parameters, like we are growing at consumption is growing at around 8 to 9%, unlike 5.5% that we have seen during 2009 to 2019. Even in terms of peak deficit is now close to 0.4%. Earlier we have seen surplus of around 11% in 2012-13. Coal production has also gone up significantly, unlike 4% that we have seen earlier. So fundamentals are very strong. There is no doubt that most of this company will run at a better plant load factor, and they will get benefit of a higher merchant rate as well as the better incentives. But the other side, if you look at the valuation, is slightly staged for the private players. They are quoting at around close to 13 to 14 EV/EBITDA multiple, close to 4 to 5x price to book value multiple, which is definitely on the higher side that we have seen historically. But few pockets where we have seen, we also are positive, like NTPC or CAC. Those companies are still trading at a reasonable valuation. So fundamentals are very strong, no doubt. Valuation have stretched, but there are few companies which will have a better valuation going ahead.
Okay, so you see improvement on the likes of CSC, etc., where there's still value on the table. But Rupesh, how are you differentiating on what basis? Because with the Section 11 coming in, that merchant power tariff that the likes of Torrent Power, etc., were going to might get limited as well. What's your take on that and the entire, Section 11 thematic which is playing out right now?
Yeah, definitely, because in the month of April, we have seen peak demand around 220 gigawatt. And this summer, we are expecting close to 240, 250 gigawatt kind of peak demand. And we don't have enough surplus capacity as of now. And renewable capacity is not adding in the way we were expecting earlier. So definitely the stress asset in the coal that has already got a Section 11 extension till October, and the gas has also come into the Section 11 category. So companies like Torrent Power with a surplus capacity on the gas side, those companies will get benefit out of that. So out of 24 gigawatt, I think close to 15 gigawatt capacity which will come on stream if Section 11 get introduced for the gas. So those companies will get benefit. In terms of volume, most of these volumes will come on the exchange. So companies like IEX, Torrent Power, JSW Energy will get benefit of higher merchant capacity they have. So those companies will get benefit in the next 2 to 3 months because of increasing the peak demand.
Okay, so those are the companies that stand to benefit. But in terms of the capacity expansion, I wanted to get a sense from you, Rupesh, if you have a view on the ancillaries as well, the likes of Thermax, BHEL, they were likely to be the beneficiaries as well, right from our transformers, rectifiers, even transmission companies, etc. Apart from the pure play generators, which are the other themes that you would recommend investors to look at positively now?
Definitely, if you look at India's capex for entire power value system, I think close to 54 trillion, you can say, kind of opportunities there for next 15, 20 years. And the kind of investment that is happening on the solar wind side, I think companies like Suzlon Energy, Inox Wind is there, which will get benefit from the RTC tenders as well as the wind auction which is happening. On the other side, I think smart metering space, you can have a smart meter manufacturer like Genus is there. Then on the HVDC side, a transmission substation, I think ABB Siemens are there, which will get benefit out of that. Then on the thermal side, because of 80 gigawatt of incremental capacity addition in the next 10 years, I think Thermax, then we have BHEL will be in focus. So those entire value chain will get benefit from this huge capex which are there lined up in the next 10 to 12 years.
Okay, Rupesh, that helps us, differentiate between the various players. Thanks so much for making time and speaking with us. That's about the power sector, but overall for the market, it's losing the power right now.
If you like this video, then like, share and subscribe to ET Now.